Want to trade better? Check out two special tools that really work in live market. See how they make trading easier and better. We will show you how these tools work with examples and will show you how well they do in backtesting session. Keep watching to learn about these tools and how to use them for your trading. We keep it simple and easy to understand. You can choose from a wide range of charts including forex, crypto or stocks. Although the strategy works with various time frames, I highly recommend using 5-minute or 15-minute charts for optimal results. For this demonstration, I'll choose a 15-minute Bitcoin chart. To begin, navigate to the indicator section and search for the first indicator, GDAX EMA indicator. Then from the search results, select the indicator to add it to your chart. The GDAX EMA indicator comes with two moving averages, which play a vital role in our strategy. To make these moving averages more visible on the chart, let's adjust their appearance through the indicator settings. As mentioned earlier, the GDAX EMA indicator consists of two essential components, the 12-period EMA and the 26-period EMA. These moving averages generate buy and sell signals on the chart when they cross over each other. When the 12-period EMA crosses the 26-period EMA downward, it indicates a potential sell signal. Conversely, when the 12-period EMA crosses the 26-period EMA upward, it suggests a possible buy signal. These signals will be visually represented by a cross sign appearing above or below a candle, making it easy to identify opportunities for entering or exiting trade. But hold on though, don't jump into trade just yet. While the GDAX EMA indicator is essential, there are other factors we need to consider before entering a trade. But before we dive into those details, I'd like to share something with you. At TradeGenius, we've been busy creating over 300 profitable trading strategies that cater to various trading styles. So, make sure to subscribe and explore our content to find the strategies that best suits your trading style. And if you found this video useful, don't forget to hit that like button. It'll help us know we're on the right track. Now, let's get back to the strategy at hand. Move on to the second indicator in our strategy, the 10 and 1 different moving averages indicator. You can easily find it and add this versatile indicator to your chart from the indicator section at the top of the TradingView platform. This powerful tool combines 10 various moving averages, providing a comprehensive view of the market's momentum and trends. But before we delve deeper into the 10 and 1 different moving averages indicator, let's head to the settings and make some adjustments. For our strategy, we'll need to focus on 3 specific moving averages. Set the first moving average to EMA with a 45 period and change its color to white for easy identification. For the second moving average, switch it to HMA with a 90 period and choose a yellow color for distinction. Lastly, adjust the third moving average to SMA with a 300 period and color it blue. To improve chart readability, feel free to adjust the thickness of the MA lines in the Style tab according to your preferences. If the chart looks crowded, disable the 2 lines from the JDAX indicator, leaving only the cross option for signal identification. This will give us a cleaner visual of the signals and the 3 moving averages we need. As we examine the chart, we'll use the placement of the cross icon relative to the candle to determine buy or sell signals. If the cross icon appears above a candle, it indicates a sell signal. Conversely, when the cross icon is below a candle, it signals a buy opportunity. With our chart prepared, we can now explore how to identify trade using these tools. To enter a sell trade, first ensure that the market is in a downtrend to avoid getting trapped in a counter-trend position. Confirm the downtrend by checking the order of the moving averages. The EMA 45 should be below all other MA lines and the HMA 90 in the middle, and the SMA 300 above all MA lines. Additionally, candles should be positioned below these moving averages. Next, wait for a bearish cross signal, which will act as our sell signal. So, once all these conditions are met, you can confidently enter the sell trade. After entering the trade, set a stop loss just above the recent swing high or one of the moving averages depending on your risk tolerance. This will help limit the potential losses should the trade not go as anticipated. For profit targeting, set your trade target using a risk-reward ratio of 1 to 1.5, ensuring a well-balanced approach between potential profits and risk management. And to execute a buy signal using our strategy, follow these steps. First, ensure the market is in an uptrend to increase the probability of a successful trade. Confirm the uptrend by checking the order of the moving averages. The EMA 45 should be above all other moving average lines, and the HMA 90 in the middle, and the SMA 300 below all the moving averages. Candles should also be above all the moving lines. Next, wait for a bullish cross signal, which will serve as our buy signal. Once all conditions are met, you can confidently enter the buy trade. After entering the trade, set a stop loss just below the recent swing low or one of the moving averages, depending on your risk tolerance. This will manage your potential losses. For profit targeting, use the risk-reward ratio of 1 to 1.5, maintaining a balanced approach between potential profits and risk management. Now that we've covered both buy and sell trade rules, it's time to unveil the exciting results of our backtesting. We tested this strategy on the Bitcoin chart using a 15-minute time frame and a reliable risk-to-reward ratio of 1 to 1.5. The results prepare to be amazed. We saw an impressive 67 win rate out of 100 trades and a whopping total profit of 94%. Over the course of 9 weeks, we experienced an outstanding streak of 6 consecutive wins against only 3 consecutive losses. But wait, there's more. The profit factor, which measures the ratio of profit to loss, coming at an impressive 3.05. And the max drawdown remained low at just 1.5%. These results demonstrate the potential effectiveness of our strategy when applied to real-world trading scenarios. With these remarkable outcomes, we encourage you to explore the strategy further and see how it can enhance your trading success.